Welcome back, welcome back. Welcome back to We Here Now. I'm X. Let's get to it. So, in this video today, we will be discussing multi-time frame analysis. How I do it, why it's important, and yeah, things like that. Things like that. So, multi-time frame analysis is a game changer, but most traders either don't know how to use it or use it incorrectly. Most traders enter too early or too late because they rely on a single time frame. And that was when I first started trading, that was a big issue for me. I will only stay on one time frame. I didn't know, the macro outlook on whatever I was looking at. I was just looking at that one time frame and wondering why I was losing, and I wasn't making the trades and whatnot. So once I incorporated the multi time frames, and yes, I have used I think three different multi time frames. Might even be four at this point. But the ones I'm using now, sticking to it, sticking to it, sticking to it. Everything works best. Everything links up the correct way. Basically, each time frame is like between three x and I believe two. Yeah, because it'll be four candles in the 2 day, two candles in the 12 hour, three candles in the 6 hour, and two. So yeah, between a 2x and a well, y'all understand what I'm saying. Y'all understand what I'm saying. So let's see where we at. Where we at. Where we at. The power of multi-time frame confluence. So what is confluence? Basically, how I think about it and how I understand it is basically more than one different entity with the same goal. Meaning, let's say you are working on the 2 day, and then right below the 2 day is the 12 hour. Let's say on the 2 day you have bullish confirmation, and then you scroll down to a 12 hour, and you have bearish confirmation. That's not confluence. In order for it to be confluence, the 2 day and the 12 hour has to show bullish confirmation. And the reason why you want that is because aligning, trends across time frames create higher probability trades. And it works, man. It definitely works. Definitely works. So here's a little example. Well, I basically just gave you guys an example, but let's just look right here. Let's just look right here. At this uptick right here, just in this area. Let's just look at it. Let's just look at it before we get too deep on the charts. Actually, how do I want to do this? How do I want to do this? Yeah, I'm gonna just do this area. Excuse me. It's just not working how I want to show you guys. Excuse me. Yeah, I mean it's just not working how I want to show you. Oh, we'll come back to it. Once I chart this up, we'll get back to it. We'll get back to it. So, how? Well, first, let's take a step back. Let's just look at this stuff right quick. In a previous video, I was explaining to you guys that this is how I used to trade with all of these lines. Don't be this guy. This looks crazy. This looks stressful. Man, that looks stressful. So what I'm just gonna do is just remove everything. Just remove everything. So how I do this? So we on a 2 day. Without drawing trend lines, I see these two candles. What these two candles tells me is that price engulfed, well, this candle engulfed this candle, which means that it's going to continue to come down. So now I know that for the 2 day, now I move down on the 12-hour. I'm only looking for shorts. Only looking for shorts. I will only be looking for shorts. Now this is trading without the trend lines. And the reason why I keep saying that is because we all know right now that this is in some type of flag. We know that. So they're just going short. It's not a good. That's basing. That's trading. That's trading with one. What's the word I'm looking for? With one confirmation on why you're getting in the trade. You always want to have multiple confirmations on why you're getting in the trades. All right, so 12-hour. This is typically where I will actually draw my trend lines, my working trend lines, my setup zone, pullback, support, Fibonacci's, whatnot. And then on the 6-hour, this is when I'm looking to start getting into the trade. Start getting into the trade. I can definitely enter on here, but however, if I found the trade on the 6-hour, like it is now, I'm going to enter on the 2-hour and put my stop loss on the 2-hour. And then I'll put my TP on the 12-hour. I'll put my TP on the 12-hour. Put it on the 12-hour. I don't know why I just made this. We got 2 hours left. I know what I see. That can be, a potential move. That's what I can see right now. It's exactly what I can see right now. But of course, it all depends on what this candle does for today. All right. How to spot trap zones and avoid fake outs. In other words, liquidity zones, liquidity grabs, however you want to call it, and swing highs and swing lows. So, where do traders typically get faked out? Traders typically get faked out, for one, when they don't wait till the candle closes. You have to wait till the candle closes. Because every time I do it, I know I'm not supposed to. Every time I do it, because I'm being impatient and I see the move, I just get in. And then now I'm in this trade for a whole week because I didn't have the patience to wait to get in. So I'm in it, a week earlier, but the price is just ranging like this. And you see that the breakout is going to happen, but price is just ranging. So it's like just wait. Just wait. All right, so liquidity zones. Basically, this is the liquidity zone. All when you see the major swing highs and swing lows. Liquidity zone right there. Liquidity zones right there. Now when price break, this candle broke the structure to right here. So it's now at that point it's invalid. It's invalid at that point. Um, let's look. Let's look over right here. Let's look right here. Liquidity grabs. All these. Look at all of this. Yeah, this is all liquidity grabs until price broke right there. Yeah, when price broke, that's when the liquidity grabs really didn't mean anything much. Really didn't mean anything. Yeah, moving on. All right, so now let's get to. I thought this video was going to be a little longer than this, but we here now. No pun intended. We here now. So let's get a few examples. Let's start off with one. So how I trade. Let's just set everything up. Oh, hit the wrong button. Gotta love the redo. So of course everybody knows this is Bitcoin. So what you want to do is basically just zoom out. When in doubt, zoom out. So you want to just put your baselines. Now it won't be perfect just yet. These lines won't be perfect just yet. You're not gonna let me do it. Yeah, I don't really like that one. Well, we are going to fix up everything. We're gonna fix up everything. So boom, we have that right there. Man, this computer is slow. So now let's just fix up everything, make everything look good and neat. And you guys should be timing me as well to see, how long it typically takes to, chart. It really don't take much. Really doesn't take much. Did I like this up here? No, I didn't. Let's like that. Let's like that. All right. So now we got the macro of price action. We got the macro. Now we got an idea of what price is doing. There we go. There we go. Do I believe price is going to reach back over here? Maybe. After this cycle, if we're still in cycles, yeah, maybe somewhere down like to 120. Maybe. But the way these ETFs is going, it's crazy. They are saying that this cycle is based off ETFs. Based off ETFs. All right. Moving on. So now I go down to the 12-hour and draw my real trend line. My real trend line. So to back it up, so I used the two day to say, hey, if I'm on a smaller time frame, I know if price gets close here, there will be a reversal, most likely. There will be a reversal, most likely. Yeah, price can dip down a little bit, but that's basically just what these wicks are. It's basically what these wicks are. All right, so yeah, let's move it back. Let's get trend line, and then just move that sucker up there like so. Move that like that. Say we got 2 hours left. We got 2 hours left, and this is on crossing the 30-day EMA. I'm just going to predict that on a 12-hour, yeah, we're definitely going to hit this 30-day EMA and go back up. That's just what I'm predicting right now. All right. You can always draw it up there as well, but no. Now, depending on what you have on your 12-hour, you might not have to go down to the 6-hour. But I like to go all the way down to the 2-hour if I do not see a trade. So I do definitely see a trade right here. That can happen very soon, within the next 2 hours. So now that I don't see a trade just yet. So let's go down to the 6-hour. With the 6-hour, price is hitting the fair value gap. It's hitting this fair value gap from last Tuesday at 10 a.m. So right now, what I can do on the 6-hour is draw this. Now I'm looking at a flag. Now I'm looking at a flag. Now I see, some structures. Now I see a pattern, which is good, which is very good. And this is what it looks like on 12 hour. That's what it looks like on the 12 hour. Now, hopefully, price just goes up, but uh, only time will tell. Only time will tell. And I basically would just do the same thing on the 2 hour as well. Now, this may be a 2 hour flag. This may be a 2 hour flag. And I say that because there's so much data on this 2 hour. Let's just look. Let's just see. Let's just see. Kind of want to bring it up like that. Yeah, that's decent right there. Yeah, that's decent right there. So on the 2 hour, price action is it's looking a little better. It's looking a little better. Now we do have, three black crows right there. We do have that. We do have that. And on a 30 minute, I rarely go on a 30 minute. I rarely go on a 30 minute. Now, would I use the 30 minute during a bull run, like actively bull run? Maybe, maybe not. And the reason why I say that is because I don't know. Like I was just thinking that I could enter in on a better price, but for a breakout on a 30 minute, but I don't know. I don't know. Let's see, let's see, let's see. And let's see where we at on time. Where we at in time? Wow, I actually made it. I actually made it. So, re- re- always remember, patience and clarity matter. If no pattern, don't trade. That's what I go by. No pattern, don't trade. You guys should always, back test everything you do. You can back test on replay mode. And of course, subscribe, drop questions, and yeah, subscribe, drop questions, comment, and like. Oh, one more thing. Yeah, I would just show you guys because I did show this to you on, earlier this year. For a flag breakout. Flag breakout. Let's look at a clear one. Yeah, I think this is clear enough. So a flag breakout. You basically go to the beginning of the move to the top of that move, and you just move that to the top of your um, breakout, and then at the top of there, that's where price should be heading. That's where price should be heading. Now, one more thing I want to show you guys. Basically, you're using the same points. You are using the same points. And boom, what do you see? Price is in the 618 area. That is the golden retracement zone, I believe it's called. So what that means is that there's a high possibility that price is going to reverse in this area. That price is going to reverse in this area. I believe that's everything that I have. Oh, another one. Another one. So we use the same areas again. Boom, boom, boom. then to the top right here, and then to the bottom. We can use this bottom. Yeah, let's use this bottom. And this basically is showing where you can put your take profits at. And as you see, a take profit is basically on point to this 127. So yeah, that is how I trade. If you guys still have any questions, any more questions on how I trade, please don't be afraid to reach out. So again, you've been watching